This presentation covers parts of the course that will be examined in the second Accounting A assessment task. It is worth 25% of the final mark in this course. You should look closely at every screen, listen to the explanations, and make notes as quickly as you can. If you miss some things, don't worry, just keep up with the next thing. You can replay the presentation at home to catch up on any bits that you have missed. The topic is business structures in Australia. You can see on the screen that there are three types: the sole trader, the partnership, and the limited liability company, which can either be a private company or a public company. Your questions for this assessment task will be about the sole trader. What's a sole trader? Well, it's a business with only one owner, just one. It's usually, but not always, a small business. But even though it's small, it may have one or more employees. It may even have members of the owner's family working in it as employees. But it has just one owner. Here you can see several sole trader businesses. Number 1 is Marita. She is a florist. Number 2 is Ben, who sells fine food. Val owns and operates his own coffee shop. And Damien, number 4, is a physiotherapist. Emma, number 5, has 4 employees in her computer software business and has just taken a loan of $50,000 from the bank. Sophie, number 6, employs 2 people in her ladies' fashion and design business. You can see that these last 2 businesses are beginning to grow larger, but they are still sole traders. They buy things or make things, then sell the goods or services that they buy or make. This video will focus on Emma and her software business. Emma chose to set up a sole trader business structure because it gives her 6 special advantages. Firstly, the sole trader business structure is fairly easy to set up and start. Emma didn't need a lot of money to start her business. She was just able to start trading. That is, creating and selling accounting software packages for small businesses. Emma enjoys the fact that she can keep full control of the business. Emma makes all the decisions about the business. She likes to run her business her own way. She takes full responsibility for the design of the software packages. And the big advantage of Emma owning and running her own business is that she gets to keep all the profits. Setting up a sole trader business involves very little paperwork, meaning Emma didn't have to fill in lots of forms or register the business with the Australian Tax Office. She does have to obey normal laws, however, and it is a good idea to keep separate business accounts, even though the Tax Office considers the business and its owner to be one and the same. For example, Emma should follow generally accepted accounting principles. And finally, if the business is successful and needs to grow, Emma can change it very easily into one of the other business structures. Emma, whose business seems to be growing, may eventually turn her business into a partnership or even a limited liability company structure. Now, if a sole trader can benefit from these advantages, then there is a good chance that they will be successful. However, the sole trader business structure does have some disadvantages too. The first of which is that Emma has unlimited liability for the business. This means that if things go wrong and the business gets a very large debt, then Emma has to pay it all back personally. The second disadvantage is that the sole trader may find it hard to raise extra capital to finance growth and expansion. For example, Emma may find it hard to raise more capital to buy the expensive computer equipment she will need to expand the business. A third disadvantage is that Emma may not have the expertise in everything. In her case, she has had to employ expensive consultants in marketing and human resources. The fourth disadvantage is the constant work. Emma has to work long hours, work when she is unwell, and there's hardly any time for holidays. Many, but not all sole trader businesses last only a few years because they depend entirely on the owner. If the owner wants the business to grow, then they usually have to change to a partnership or limited liability company structure. If Emma retires, or even dies, then that's the end of the business. Of course, these disadvantages have to be balanced with the advantages to determine if the business will be an overall success or failure. Now, on page 36 of the study guide, stakeholders are defined as anyone with an interest in the activities or decisions of a specific business. This diagram lists both the internal and external stakeholders that may have an interest in a sole trader's business. You need to know this list well. Learn this list. Of course, anyone who has a connection with the business has a strong interest in it. That's why they are called stakeholders. Look at these internal stakeholders: owners, managers, and the employees. They all want to see the business perform strongly and make a profit. The overriding interest of these stakeholders is that the business provides an income for themselves and their families. Naturally, Emma wants her business to be successful. Her employees want an income, a job, or a career, and this will be important for them. Or maybe they simply want satisfaction and a sense of achievement in their work. External stakeholders also have a strong interest in the business. The customers, for whom buying the software is important for the operation of their business. Emma's accounting software package allows customers such as Marita to produce profit and loss statements, balance sheets, and cash flow statements on her laptop. Customers want to buy the right software to suit their business. Look at the supplier. This computer supply store provides Emma's business with a variety of computer products on credit each month. Their interest is that Emma can pay back her debts on time. The government is interested in Emma's business because she will need to pay taxation on her net profit. The government must also ensure that Emma is abiding by the accounting and financial services regulations. Finally, Emma has taken a $50,000 loan from the bank. The bank is a stakeholder because it wants her to be able to make her monthly payments. To make sure that the business will be successful, Emma should keep a close eye on her profit and loss statement. These are the headings from the classified profit and loss statements you've studied in class. You will notice it has two main parts: the part leading up to the gross profit and the part from gross profit to net profit. This shows the gross profit. The business gets its money, its revenue, from selling goods or services, and it subtracts its cost of goods sold, or the money it spends to buy or make those goods or services. If an owner like Emma notices that the gross profit is getting lower year by year, then that is a message that she has to increase sales or prices and reduce cost of goods sold, or a bit of all three things to make the GP rise again. This is the second part. It shows the operating expenses the owner, like Emma, must pay to keep her business operating. These operating expenses relate to the day-to-day expenses of the business and are subtracted from the gross profit to get the net profit. For Emma, her operating expenses include rent, wages, insurance, and an interest expense on her loan from the bank. Again, she must look at each and every expense listed and make sure that they are kept as low as possible to keep her net profit as high as possible. There is a big difference between operating and non-operating expenses in the profit and loss. On the one hand, operating expenses are those that have to be paid in the normal course of running the business, like wages, rent, or advertising. On the other hand, non-operating expenses are unusual expenses, things like a fire or an accident or a loss from theft. Unfortunately, Emma's premises was damaged in a flood during the last accounting period. These differences are explained on page 4 in the study guide. So that's the profit and loss statement. Emma wants to manage her own business her own way. The best way for her to do this is to use the information from the profit and loss to make good decisions. She needs to know and analyse how the revenue was earned, the different costs that make up her cost of goods sold, and her operating expenses and her non-operating expenses. Emma will look for ways to increase her revenue and decrease her expenses in order to maximise her net profit. She must fully understand every item in her profit and loss statement. So, good luck.